Welcome to Trading Lounge and the Australian report for Tuesday, December 7, and starting with the ASX on the daily chart here. Yesterday we talked about a triangle pattern emerging through here, so that's what we're tracking at the moment, and it would also be in line with how the US markets are going to be moving as well. They're not in a triangle, but they're expected to move up and then move down again, and this is also the same for CBA as well, so the finance sector, because obviously the ASX is governed mostly by the banks. So yeah, just eyeballing this up a little bit here, we're looking for, with CBA here, we've got a very reasonably clear 5-wave structure down here, so that means that we'll get an ABC back and then 5 down. So if we track this situation in terms of timing and direction, then we shouldn't be too far off track. Okay, we can come back to the banks in a moment, but that would leave us up for wave D and then wave E over here. So I've got this wave C and D here, a little bit sort of scrunched up here. These ones took quite a long time here. So yeah, maybe we'll just give this a little bit more space in here to move. So there's a couple of ways to look at this, but both in the same sort of direction. Yesterday I looked at it as an A and a B and a C moving up here, but I think that with CBA, we're just reaching the A wave, really, aren't we? Not even finished the A wave, so we're probably looking at something like this here. So whichever way we look at it, we're going to be positive for a little while, okay? So that could probably come up to this level here. We'll just keep an eye on that, but some sort of little 5-wave structure coming up here. We'll look at that on the hourly chart in a moment, and then an ABC pattern, and then a C wave, and then this E wave over here. I mean, don't pay too much attention to this, because after it's all finished, it'll look like people's drunk again. So yeah, but just generally sort of looking at it in something like that. We've got to get the timing right with CBA on this. So with the hourly chart here, I've got it as the A wave here. I could put the A wave here as well, but it doesn't really matter. But that B wave needs to stay there. So we probably need to look at this here. Let me just sort of label this a little bit. Probably as 1 and 2 in here, and wave 3 on 2, 3 there, 4 there, and 5 there. And then we'll need to lift this up here as such. We don't need to worry about this one too much. We can go to the other one. We don't need that. Just noise. And then we'll be just looking for 5 waves here. So 1 and 2 in here. And 1, 2, 3. We've probably got wave 3 there already for that. And that's wave 4 there probably. And wave 5 to go up into that space. It gives us a little bit of something to work with anyway, you know. But anyway, the takeaway is if you're long, stay long up and probably get up to the 7.4. But let's just see how it travels today as well. Let's just have a closer look at CBA now as well. So let's just clean this up, and we'll also look at it on the tick chart as well. But it does look like we've got 1, 2, and 3 and 4 in there. So I'm just going to go to the 10 tick and just get a bit more data in here. Okay, so yeah, it looks pretty impulsive at this point. We can do our best to label this. So what, it doesn't really matter too much, does it? So I'll probably look at that as 1 and 2 there. So to churn up your time, 1, 2, 3, 4, 5 for that, for 1, 2, 3, 4. Yeah, so that will put us pretty much in tag to the other one. I should have lifted it up 1 degree of structure, but it doesn't look like that's the 3rd wave of that, because that's unwinding there. So it will probably be, can I look at that in any other way? It'd have to be wave 1 there. I'd like to put wave 2 there, but so not that it matters a lot. We won't be far off. Let me just put these in here. And the 98 will be important in terms of the levels over here. So this 98 here, I always call 8 a profit-taking number. We've moved into, I won't worry about that. That's just noise. So yeah, let me just finish this off a little bit. really even got to the third wave yet in here, so it really wants to go up higher. I mean, we will get a dance across that. It'll be something like this. So we're going to get close to 99 up there on that. So let's just go back to the daily chart for a moment and just see how that looks, just to see if it looks stupid. No, not too bad. Well, we know that 98 is going to play a bit of a part there at some point. But it does leave us, for the A wave, it leaves us the A wave here, and then we can put this up here for that. Just move that as well, and just double check that retracement level there. So that's about right. Could come higher. I mean, it will be sort of gunning for that gap, but it will depend on what the rest of the world's doing. So we need to sort of understand what CBA is doing, because that will be a lead for the ASX during the day, and the S&P 500 and the NASI will be leading the ASX during the evening. So we probably get to 100 before we see this B wave come in, and then the C wave here. But the 100 will also too, the 100 will kind of be a sticky number, you know, it'll stick to it, you know. But we're not interested in trading this. I mean, if you're a day trader, you know, you need to do your thing, but otherwise this leg down here will be the one that we can focus on. So that's that. So let's just have a quick look at ANZ. Yeah, it's pushing up because we wanted, with ANZ here, we're looking from wave 2 here as 1 and 2, and then 1, 2, 3, 4, 5 for third, 4th and 5th for the third, and then up for the 4th to here. It's a bit slower, this market, and then down again, and that they all shift. But I mean, this is such a short little journey, but this market doesn't move that quickly. You know, it can hang around in the same place for a long time. So anyway, we've tracked all this quite nicely, I feel. So we'll just stay with it, and we'll see how that goes. And also this here too, by the by, will be. If I just clean this up a little bit, so this will be something like this here. And wave 4 may even get a bit more complicated, you know, than this one down here, so it'll be something like this. Some sort of little A, B and C in here. So CBA is the leading product, stock, whatever, and leaders cover more range than followers. But ANZ's got its own thing going on in the world, isn't it? It's, you know, it's outside of Australia to a point. Okay, that's that. So just coming back to CBA here for a moment, in this move here. This will be the timing for the ASX. So if you're trading the ASX, you should really have a good understanding of this, you know. And then behind the banks, of course, you know, because the banks are lenders and all that sort of stuff. So behind the banks is the carry trade. So understanding the yen, and I suppose the carry trade's not in the yen anymore. I have to check, see what's what these days. But anyway, that's all another story. Just connecting dots. So yeah, let's move on to the iron ore. So yeah, well, yesterday we were speaking about. Well, first of all, I don't know if I'm calling a low in. I mean, it looks like it to me at this particular point. Now, I don't, as I mentioned, to call the low in here in a strong way, I need to see 5 waves up here, because if I only get 3 waves up, well, then it's corrective and we make a new low, and I've led everybody astray. So I want everybody to be very clear that we don't have 5 waves up here yet. We have wave 1 and 2. And we can building into this. This also looks like it might be a little bit, you know, because sometimes what happens is that you can look at 5 waves as 1, 2, 3, 4, 5, and then, you know, you'd get your ABC at that point after that. But sometimes when a trend goes, it will get wave 1 here, and then it will get wave 1 of 2 and then one of 2. So it kind of, then it gets to a point where it really sort of starts to stretch out. So it looks a little bit different. It's 1 and 2 and 1 and 2 and 1 and 2 and 1 and 2. And so it's completely different from that. And I've got a feeling that's what we might be getting here, because this little guy here, this move up here, is really quite short. We noted that the pullback and all of this from that bar, that one, and that one was all on lower volume. So we knew that it was corrective and we'll be pushing higher. We also know that the medium level, halfway between 2 major levels, the 650 here, is also going to be a sticky number as well. But having that on support, we've been moving into the resources that are affected by iron ore. The other things like copper, natural gas has been smashed again, down another 4%, I think. But copper, gold, maybe crude, those sort of things won't be ready for moves up until after Christmas, I don't think. They finish their corrections. I mean, and maybe this is not finished. Maybe I've read this wrong here. Maybe this is down for 1 here and back for 2, then 1, 2, 3, 4, 5 for the third wave and the fourth wave. But as a fourth wave up here, it's pulled up really quite high. So I don't think it is. So anyway, just shooting the breeze a bit. But look, to have those 2 little moves up here is absolutely fantastic. And what we want to see next is, because we look at this as the arrival, the reaction, the first high above the level, the ABC back again, and so on. But we're getting there. We're just talking about it, Rightio. So that will leave us into, let's just go straight to BHP. So with BHP, we expected it to drop back below the level yesterday. This is a daily chart, so it's done that. So today it will recover and pick back up again. I mean, basically, I'm just expecting it to vibrate across the 40. How it vibrates across the 40 is not an exact science, but we're seeing it happen. So it's not support yet in all of this. So, but anyway, let's just go to the tick chart here. So yeah, there's a couple of ways we can count this up here, as we talked about yesterday. I won't go over it all again, but we were looking for a move back, either as a wave 4 or a wave 2. Now that that's done to a point, I can see that we've got an ABC to this point. I don't know exactly what that is there. We'll just give it another session. We'll give it a session and we'll play it out. That horizontal line was the 38.2% retracement level for the green wave 4. So we may have 1 and 2 here coming back into this box. So we don't really need to do anything at this stage. We knew that it would pull back because of the move up through here, and we just wait it out. So we expect the next move to be above, to move up here somewhere above here. So the arrival, the reaction, the first high above the level, the ABC pattern. If we're going to go long again, as always, we go long here. It's a bit of a rough sort of pattern here, but the arrival, the reaction in 3 waves, the first high above the level, the ABC. I don't know if it's the ABC just yet. We may get 1, 2, 3, 4, 5 down here, then an A and a B and a C and so on. So it might get a bit more complicated, but we are seeing this pattern here, the arrival, the reaction, the first high above the level, the ABC pattern, and we're going long above here. Now, you could get a better entry over here. I'll leave that up to you to do, because working this pattern here, I've simplified everything. This is also with Elliott as well. It's normally wave 3, 4, and 5 here, which can make wave 1 and ABC back again, or wave 3 to make wave 4. So it fits into the wave count. It fits into the psychology of people moving in and out of the market around a certain price point. It gives you a very good visual on support and a very good understanding of how a market migrates from being support to resistance to being support, and also the timing of the market, when to get in. So you get out here, get back in over here. And this pattern works on a 2-minute chart, or it works on a yearly chart, all those sort of things. So, but in this case, we're working with this degree of structure, and that's it. So we'll leave it at that. That's where we're going long at this stage. You may be able to get a better position in here. I think today will, as I mentioned yesterday, it will gap down. Today it will gap up. This market's traded in South Africa, Frankfurt, UK, US. I don't know if it's anywhere else, but Yep. So let's have a look at FMG and RIO. So with RIO here, it also gapped down. So I'm still looking at this as a positive note. I understand that this can be an A wave here, a B wave here, and a C wave up here. So that can be corrective at this point. So we can put that there. We're looking for another move up here. Once again, if you're not long here, then we can go long here. Any move up above this here now, because as it stands at the moment, there can be an A and a B and a C, and this could be down for 1, an A, B, C, back for 2, and then 1, 2, 3, 4, 5, and then back and continue to move down. And all this can be corrective. I've talked about this before, but taking this top out here this time, if we get if we're fortunate enough to see a move up here, then all of this turns impulsive at that point. Well, it could still be corrective, but we'll be going up much higher. If it takes out that top, we'll be going above the 100 at that point. So that's the beauty of that. And FMG will be the same. So forward skewed here at slightly different pattern off the low here. So I can count this in different ways as well. I can go wave 1 and 2 here, and then 1 and 2 here as well. You may be long in here already. If you're not long, then you can go long above that high here, but I'll just leave that there because we talked about something else before about all of that. This wave 2 may need to go over here for that as an A wave, a B wave, and a C wave on that low there. We should see that push up from that point, so we don't need to worry about that too much at the moment. I'll leave everything else as is. But yeah, so with iron ore being up, that's looking very positive for our little bullish count. But, you know, I'm just trying to build a case off the lows here for all of these markets. And, you know, it's just as easy to be right as it is to be wrong. So we just got to gather evidence and keep building a case for it. Yeah, I mean, we're professionals and we should be getting in right at the beginning of the trend. You know, I mean, our first position was down here for this. So we're doing all the right things at the right time when we're understanding the risk, and yeah, let's just see how we'll see if the market gods deliver for Christmas presents for all of us peasants. So let's have a look at the dollar, which is still expected to move lower. So it's not really, the dollar hasn't come in and supported, this commodity dollar hasn't come in and supported the commodities just yet, but I do feel that we're sort of getting to a point here. We've got wave 1 and 2 here, then 1 and 2 and 3 and 4 here. We may not be finished just here, then we'll have a wave 4 here and then a wave 5 down here, and then we can move up from there, and that will give us a bit more strength at that point in time. That's it. Thanks for tuning in. Cheers.